Ladies and gentlemen, I have got a very special treat for you now. I'm very excited that we have Lynette Zang. She is the Chief Market Strategist for ITM Trading. Now, I'm going to talk to Lynette about the Great Reset. I'm going to talk to Lynette about what's going on in the markets, but I'm also going to ask Lynette a lot of things about gold, why you should own gold. You know, what is gold as an investment? Because after all, you are at the virtual gold conference. Lynette has had a huge background. Now, she has been a banker. She has been a stockbroker. She now works for ITM Trading. And one of Lynette's things is her goal, I love this, is to translate financial noise into understandable language. Because let's face it, right now, a lot of you don't understand gold. You don't understand why you should even own it. You don't understand what's the difference between owning, investing, trading. Lynette Zang, thank you so much, all the way from Phoenix, Arizona, via the good use of technology. Great to see you.
Yes, I'm so happy to be here, Carrie. It's something I've been wanting to do for a very long time. So I hope this is only the first time, but I'm super happy to be here. Thank you for having me.
Well, Lynette, it is great because one of the reasons I wanted to make sure we could talk today is there are many people out there in I guess, the general public. They don't understand gold. They don't understand it as an investment. And one of your goals is to translate that financial noise, because I find that a lot of people say, you know, not listening, not listening. And right now, as the title of what this discussion is about is the Great Global Reset. So I'd like to start. First of all, let's talk a little bit about your background and how you got to be the Chief Market Strategist at ITM Trading.
Well, you know, Carrie, I've really been in these markets on some level since I was 10 years old. And I started them because my uncle was a major antique dealer back east, and he was my favorite uncle. So he really taught me about tangibles. But this is such a key story. And I didn't even, obviously, what do you know when you're 10? But my parents and I were at his house one day, and he took us into one of the back bedrooms. And he said, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes. And he had these two huge floor safes. So, I mean, I turned around to look. They were packed with gold coins. You could not get one more gold coin in this. And this was 1964, when it was illegal to hold more than 5 ounces of gold, except these were all pre-1933 gold coins. And, you know, I didn't really understand the significance of that at that time. But really what I got from him was how tangibles work. And it always goes in like a figure 8, from undervaluation to fair valuation to overvaluation to fair valuation and back again. So it's that repeatable pattern. And then, you know, yes, I started in banking when I was 15. And then I became a stockbroker. You know, I worked in banking for many years, studied business finance. So I stayed in that until I became a single mom and had to raise 2 children. And it wasn't really, frankly, it wasn't enough money for me to do what I needed to do. So that's when I became a stockbroker. But though God, you know, life has a way of kind of guiding you to where you're supposed to be. Because I can recall 2 different times when I met people that were in the gold industry. And it was not time for me to do it yet, but I remember this catch in my heart, like, oh. And, you know, going through and living through what was happening with the markets and the insanity in 2000 and 9/11 and just everything that was going on, I came to ITM Trading in 2002 after I saw the patterns. And at that time, spot was like 253, silver was about $4 and change. But I could see this pattern, cup formation, that was coming to conclusion, which actually did conclude in, I believe it was October of 2004. And you know, I've studied currencies since 1987. So you start to see those patterns. And I do consider myself an artist. And so, you start to see these patterns, and, history repeats itself. So I believe it, but when you go back and study it and you see that the same thing has happened over 4,800 times without one exception, I don't know if we're doing the same thing. What do you think? You think we're going to get the same results? Probably.
But are we doing the same thing? And isn't life a little bit different now? Because, we have technology, we have talk of going completely digital. Doesn't that potentially interrupt the pattern? And I do want to talk about patterns, and you say that everything is a pattern.
Right.
But will technology and digital interrupt the pattern?
No, it speeds it up. That's what it does. It speeds it up. And I know you've had Jim Rickards on, and I don't know if you talked to him about this, but I've learned a lot from him over the years. And one of the things that he's talked about a lot is dynastic wealth. And dynastic wealth is wealth that lasts in families at least 300 years. Think of the Queen of England, right? And it has three legs. It has real estate, rare collectibles, and gold. And arguably, gold is the most important leg on that dynastic wealth stool because it's real money. And, when you say, well, people have been taught different things. Yeah, we've been taught not to understand what money is. And so that's something that I like to talk about a lot because it's a tool to value your labor.
Okay, so let me stop you there, because you talked about the three legs: real estate. Hey, in Australia, everyone's obsessed with real estate, let me tell you. Rare collectibles, most people don't understand it. But then you said gold, which is real money. Now, if you could expand on that, because most people look at it and go, no, money is that funny stuff that I have in the bank that I can take out and buy my milk with. Why is gold real money?
Well, there are a number of reasons, but it's, when you look at gold is real money because it has been accepted as real money for 5,000 years. And it does not require a government to say, oh, this is money. In fact, they prefer to do the other way. But a lot of things over the years have been attempted to be used as money, but only gold meets all the criteria. So it's divisible without a loss of value. I mean, diamonds have a lot of value, but if you cut them in half, well, they lose most of their value. But that's not true with gold, right? It's all recoverable. So as a tool of measure, it is absolutely ideal because we can account for pretty much all of the gold that has ever been mined. And we also can determine how much is left. So there's a finite amount of it. So it's money because it has been globally accepted as money. Right. Additionally, it has, as its most important function, in my opinion, and probably in most people's opinion, is that it holds its value over time. And the reason why it does that is because it has the most functionality of any asset having use across the entire global economic spectrum. So you can have a piece of gold on your body or a coin in your pocket, go anywhere in the world and instantly convert it into any other currency. Got it. But because of that functionality and that demand, go back in a true supply demand market, it holds its value because there's always multiple places. So it's used in the financial system, right? Central banks hold gold. It's used in medicine, it's used in manufacturing, it's used in food, it's used in jewelry, it's used everywhere. So sometimes demand is higher, sometimes it's softer, but it doesn't lose value because it has qualities that they've never been able to duplicate. Now, also why it's money, it takes labor and energy to pull it out of the ground, right? So when you're on a gold standard, what you're really doing is trading labor, my labor, for somebody else's labor that pulls it out of the ground, right? That is a fair system. However, governments that want to tax and spend have a challenge with that system, because if they do that, if they tax you on it, you know it. And you might not agree to it. You might give them some pushback. So they had to go to fiat, which is government money and by decree, that in the very design of it is inflation. It's
what do you mean by that? What do you mean in the very design of it is inflation?
Well, you have John Maynard Keynes, who's the father of Keynesian economics, which is what we're dealing with, right? Yeah. And they knew when they were designing the system, they knew many things, but there were two key things that they utilized. Number one, they knew that people marry the legal money of the state, which is why when you look at a place like, say, Venezuela, that's going through hyperinflation right now, they'll have the new bolivar, the strong bolivar, the green bolivar, the purple bolivar, but it's always the bolivar. So people somehow mentally think that nothing has changed, when in reality, as they shift through it, like we did in the US as well, it's still the bolivar. The public marries the legal money of the state. But more than that, they know that not one man in a million understands inflation. And inflation causes nominal confusion. So for example, if you had a $20 bill 10 years ago and you have a $20 bill today, nominally they are identical. They're both $20 bills. But what that $20 bill bought you 10 years ago and what it buys you today is vastly different.
Yeah.
So in that way, through inflation, the government, whoever is closest to the central banks that create the money, they always get the money when it has the most value.
Yeah.
Okay. But for governments, that was a way for them to tax you without you knowing it, because they didn't have to legislate it.
Wow.
Right?
Yeah.
You just stop and think about it, and it loses. And not only that, but through inflation, the instruments or the assets look like they're worth more money. So then when you sell them, they get to tax you again in inflation. It's genius. I mean, seriously, it's genius.
I actually hadn't thought about that. It's not the value going up, the prices are going up. The governments can tax you more, but you think you're wealthier. But the government is taking more of the funny money away from you. Very interesting.
Oh, so, it's genius.
So is this way of tax and funny money and inflation here to stay? Because one of the questions I was going to ask you, Lynette, are we in inflation or deflation? Because I guess, when you look at the CPI, the Consumer Price Index, I find it amazing that they put some items into the basket and not others. So you can look at it, we could be in deflation, but we could be also in inflationary times.
Well, they are just the same thing on opposite sides of the coin, because really, what are they really fighting here? They're fighting deflation, prices going down. But we're supposed to believe that that's bad. Well, if you make the same amount of money and it costs you less to live, why is that bad? But there's only one way to fight deflation, and that is with inflation.
Right.
And so, right? So once they started to devalue, we talk about we talk about reset, and this comes up a lot because people think that a reset is just this one big clap overnight event. And certainly it is.
Could be.
But, right, absolutely. But inflation itself is constantly resetting the value of the currency. Because if it costs you more to buy gold, silver, glasses, anything that you use, but it has the same functionality that it's always had, is that really that asset going up in value, or really the currency, the government currency, going down in value?
Yeah.
But corporations, the benefit to them is that they get to, what is that inflation based on? Goods and services that they sell, right?
Yeah.
So at the same time, they can raise wages, but wages never, ever, ever keep, well, the average wage, I should say, never, ever, ever keep pace with inflation. And that too is by design. So this monetary system that's created has supported the wealth and income inequality, but it's hidden. You know, in 1971, the average wage was $9,500. And I'm not saying you were super wealthy at that, but you could support on one wage a family of four.
Right.
Today, I think it's something like 52,000. So on the surface, you go, well, wow, I would really much rather have 52,000 than 9,500. But in this country, when they gave out the stimulus checks, they gave the stimulus checks out to anybody earning less than $75,000 a year. And one wage earner at 52, you need two. And then you're still at 100,000, you're still paycheck to paycheck.
Wow.
Right. So it looks great, but it's just that nominal confusion.
You know, one of the things that we spoke about just a moment ago was the monetary reset. What does that look like in your eyes, Lynette?
Well, first I'd like to say I've been talking about the reset since 2009 when I heard Christine Lagarde on a Bloomberg interview, which has since been taken down, unfortunately. But she used the term reset, the financial system, the social, everything, probably 27 or 30 times in that interview. And I went, yep, because the system really died in 2008. So when you ask me,
why did the system really die in 2008?
Well, the system is based on what is the most powerful tool that central bankers really have? It's interest rates.
Yeah.
And so when it was discovered, shocking, that all of the manipulations in the LIBOR was going on, that was a benchmark that was created in the 80s. And at last count, they had something like $640 trillion notional, mind you, which means that just reflects the value that Wall Street or the markets have given the contracts, not reflective of the underlying value at risk. But it's the interest rate benchmark that got irreparably broken. And if you look at all of the experiments that central bankers have been doing since then, quantitative easing, giving interest rates to banks so that they build their reserves, and oh God, the laundry list of all of these experiments, the managed markets. Not saying that central bankers haven't been managing the markets prior to that, but it's been covert. Right. I mean, I was there in 1987 on Black Monday, and then shortly thereafter, they developed the plunge protection team. So you don't change behavior, you just change how you account for it. But in 2008, the system, the interest rate system, the biggest system of the central bankers, died. And it's just been a massive amount of experiments. Let's throw this on the wall and see if it sticks. And the issues that created that, the derivative issue, that has not been resolved. They've just changed the accounting, netting, and compression so that it looks smaller, But even so, it's larger than it was in 2008. And all of those legacy contracts, those big bets, legacy bets, they haven't been resolved. They went
No.
onto the central bank balance sheet, which taxpayers are responsible for. So the system died. They can't get out of this. And the only answer has been more money, more money. And anybody that really thinks there's only been 2% inflation a year, but even at that, that compounds. It's not like it goes up, prices go up, and then they come back down again. They go up and they come. No, they just look at the CPI, as you said. They just keep going up and up and up and up. That is intentional. And they use inflation today. I mean, in 71, I remember in the 70s and 80s, that was inflation was a bad word.
Yeah.
Now it's what's going to save us because it passes for growth, right? It's not real growth. It just
it passes for growth.
passes. So it's just, so that's why I say the system died in 2008. We've been on the path of reset since then. And what it looks like is, we should have gotten a taste of it not a year ago in March and April. Supply chains are broken, right? That hasn't been repaired. And it looks to me like a hyperinflationary depression.
Depression, not recession. Let me ask you this. Now, we talked about interest rates.
Not recession. We're not in a recession. We're in a depression. I mean, for some people, it's great, but for the masses, it's definitely a depression.
Well, I think for the masses, they don't see it at the moment because as the emperor still has his clothes on because the government keeps handing out the lollies. Oh, you're feeling a bit of pain here, have some more lollies. Oh, well, your business is suffering, have another lolly. And it's what I say a lot of the time is it's kicking the can down the road. And are we going to keep kicking the can down the road and do a reset by saying, do you know what? Because here in Australia, for example, it is getting harder and harder to use cash. Everything wants to be digital. You go into a store and they say, no, we don't take cash anymore. And I keep saying to people, cash is going to it's going to be very difficult. I like cash, not because of the fact that it's losing value, but because it gives me an independence. I don't need them to know if I have a coffee on a Tuesday morning. But do you see that the reset could be that we move into a digital currency? And what role does gold play with that? And why should people care if we all go digital? And for example, we'll come on to this in a minute. There's lots to unpack here, but you've got Bitcoin as the mother of all digital, I guess. Why should we care about gold? Isn't it just, as Warren Buffett says, it's just a rock in the ground?
Well, first of all, his father would be rolling in the grave because he did a whole thing about, being able to convert dollars into gold, because that's the tool that we have as individuals to hold everybody's toes to the fire in many ways, but actually to be completely independent. And I will 100% agree with you that we are going digital, but that is inside of a surveillance economy and the complete loss of your autonomy. And you brought up such a good point where it's getting harder and harder to find places that will accept cash. Yeah. And we want to think, oh, it's because of COVID or it's because of this. But if you read the International Monetary Funds, they did a piece in 2015. It's still like my favorite piece, to tell you the truth, because it was breaking below the lower zero bound. In other words, taking interest rates negative. And in that piece, they outlined this 18-step program on how to take us cashless and get the public to volunteer.
Wow. Back in 2015.
Oh, yeah. Oh, yeah. Breaking below the lower zero bound. And they've subsequently done additional pieces on that, how to take you deeply negative. But one of the pivotal points, and they even mention in there, they know how to do it. Just look at 1913, just look at 1971. So yeah, they know how to do it.
Okay, so sorry to interrupt you, Lynette. For those of you out there that are not sure what Lynette's talking about, 1913 was when the Federal Reserve was set up. 1971 was when President Nixon temporarily took the US dollar off the gold standard.
And handed over the full role of inflation or control of inflation to private bankers.
Yeah, private.
So it
bankers.
is just private bankers that, and what do bankers know? They know debt and they know interest. That's what they know. So, but, you know, going back to that whole piece, they know how to do it. And one of the pieces that they say in so many of the reports, not just that one, but I mean, it's in like almost every one when they've got, this is how we can do this, was that they want their policies to be introduced by the retail public, so the stores, so that you do not know that this is based upon their policy. Because if you know that, it could create a political issue and you might not want to cooperate. And I've had this argument with a few people, because if I go into a place and they will not accept cash, I stop going. I'm not going. I won't even go that day. I'll go someplace else, because we speak with our pocketbooks.
Yeah.
That's how we vote anymore.
But Lynette, have a look at the millennials. Like my son, they don't have cash. They don't understand cash. They don't want cash. They just go tap and pay, and it's worse. They now use their mobile phone, right? And they go
where they hold all their information.
Everything. So everything is controlled and everything is tracked.
And exactly. And if you take a look at China, I think China is really showing the world how to create that complete control over society. So they're not going to show fully their hands just yet. But when people are married into this new system, I mean, the Federal Reserve announced the Fed Now accounts and the digital dollar, and they don't even anticipate being ready to issue them until 2023.
Wow.
Why are you doing this big push and advertisement and marketing campaign in 2021, although they started in 2020, if you're not even going to be ready to introduce it in 2023?
Yeah, because we got to get the people ready. Now, Lynette, I'm really sorry, but we are running out of time. And you know what?
No!
I'm going to have to get you back on. But hang on.
Please.
We've got 3 minutes. Here's what I'd love to ask you. People listening to this right now, and this is really important. I'm known as the gold nerd, the gold lady, whatever. Why should people, as part of their wealth preservation, why should they be looking at gold now? Because I have people say to me, well, it's not moving, you know, but it's not about the price of gold. Why should they have gold as part of their portfolio?
The reason why you want gold is, number one, it is completely, at least at this point, out of the system, but keenly, it is how a government performs the reset of the currency to take it to nothing, because the currencies, the fiat money, has no intrinsic value. And no, you can't eat that either, but it loses value. So when they reset the currency overnight, 1,000 to 1 or whatever it's going to be, they do it against gold money, which is all intrinsic value, because it is used across the entire swatch of the global economy. If you do not have gold, then you are subject to the whims of governments and central banks. If you have gold, then you have your independence. And as they are destroying the last little bits of vestige of value in the currency, which only has any value right now because people still agree to work for it and use it as their tool of barter. But once they do, I think UBI, universal basic income, and people start feeling comfortable and start shopping, you are going to see the hyperinflation begin. You will see that. And if you don't have gold, you have no protection.
Do you think universal basic income is coming?
100%. Yes.
Wow.
There's absolutely zero doubt in my mind they're going to have to, because they need people to spend and shop. This is a consumer-driven economy, and they'll do it through those Fed Now accounts where they just make this deposit. Here, go shopping.
Is that going to be global, Lynette, that UBI?
Yes, absolutely. It has to be global. This is a big global event. It has to be global. Yes.
And my final thoughts, final comments on, and I know this is a bigger subject, but you believe there's a financial repression is pushing people into speculation.
Well, not only do I believe it because if you read the reports from the IMF and the BIS, Bank for International Settlements, on financial repression, it is a tool that they consistently use to, yes, push people out on that risk spectrum. You hold money in a bank, you're getting nothing or you're getting negative, right? So yes, exactly. Financial repression is a huge tool that central bankers use to nudge, they call it nudging people in the direction they want them to go.
Well, I wish we could nudge a little bit more with you because there's so much to unpack. Lynette, you have a wealth of knowledge. If people want to get a hold of you, how can they follow you on Twitter? How can they find you? And if they've got questions?
Well, I do have a Twitter page, but I do educational videos on YouTube 3-4 times a week. So just go in, you can put my name, Lynette Zang, or you can put ITM Trading and the channel will come up. And they can also go to itmtrading.com. We've got a great blog piece there where I always write blogs and have all the links to all the research. So we're pretty easy to get a hold of.
Well, you've got a wealth of knowledge. I really so appreciate your time. I know you're very busy, and thanks for joining us on the virtual gold conference today. Thank you, Lynette Zang.
It's been a pleasure, and I hope you have me again.
Absolutely.